Hello everyone and welcome to a new market report. My name is Gonzalo Canete and in this occasion this is a corporate results report. We're going to analyze the results presented by financial industry this week on the market, particularly Morgan Stanley, Bank of America and also Goldman Sachs. I have done a presentation just to give you all details from a fundamental perspective, also from a strengths and also weaknesses point of view. I would like to highlight the best of every single bank, and especially you will see that actually during this week we have seen how the market was dropping. SP 500, Nasdaq 100 were dropping. The main indicators, the main indexes of the equity in United States was dropping, and the main concerns of the investor was, well, what is going on, what is dropping. I have been explaining the reasons why the market has been dropping in our report, in our daily report, which is mainly the new pressures that US government is doing in the direction of the selling or exporting high technology semiconductors and microchips to China. So it's pressuring all the rest of the partners. But in this occasion, in this video, we are gonna discuss which ones from those markets who are dropping, which ones are actually the market that are getting in a stronger position, because what we actually seen is a redistribution of the equity on portfolios. We have seen how technological sector has been dropping, but other sectors like financial sector has been doing really well this week. And I'm gonna show you the performance at the end of the video, also the charts to analyze exactly what's the situation in terms of price of every single of these ones, of these banks. So you can see actually if the current price is attractive or not, and what we could expect for the coming ones. Never forget that the last report, the last corporate report we did, it was about Nike, and our projections, our predictions on that video was exactly in line with what happens after with the price. Now let me share the whole screen so you will see everything in detail. Welcome to the presentation. If you are not, by the way, I invite you to subscribe our channel and follow more news and every single report. Now continue with the topic. Big banks' earnings remained resilient. Major US banks continue to top Wall Street estimate, with investment banking giants seeing a boost from industry-wide activity. Bank of America also give investors positive signals despite decline in profits. In terms of Bank of America, let's analyze what we can see, a highlight from this company. Resilient, the net interest income. Bank of America beat Wall Street estimates and provide optimistic guidance for its net interest income, a key metric for the bank. Let me show you also the estimation for three of them. Here's a trading view table which is showing us what exactly was the estimation and what's the results. As you can see, in the case of Bank of America, we got a forecast revenue of 25 billions, 25.2. We ended in 25.3, almost 25.4 billions of revenue. So again, above the estimations. In the case of Morgan Stanley, the estimation was 14.3 billions. The result was 15.09, almost 02, 01, almost 02 billions. Again, above the estimations. Goldman Sachs, the estimation was 2.3 billions, and we got 12.3. We got 12.7 above the estimation. So in all cases, the results was above the expectations. Now, again, back to Bank of America and its performance. Consumer banking strength. As a bank with a large consumer banking business, Bank of America is particularly sensitive to net interest income, which means like how much money they are generating with the main source of income for commercial banks, which is the interest rates on loans. The difference between interest earned and paid. Revenue growth. Bank of America saw a slight increase in revenues to 25.4 billions, beating analyst estimation. To the net income slipped 7% to 6.9 billions. Morgan Stanley, on the other hand, Morgan Stanley in profit saw robust performance. Morgan Stanley in second quarter profits jumped 41% to 3.08 billions, exceeding analysts' estimations. Revenue growth, revenue climbed 12% to 15.02 billions, driving by a strong performance in wealth management and institutional securities. Investment banking boost. Investment banking revenues surged 51% on higher advisory inflows and fixed income growth. And in the case of Goldman Sachs revenue jumped soaring profits. Goldman Sachs second quarter profit jumping 150% year over year to 3.04 billions or 8.62 earnings per share. The dividend, strong dividend division. The investment banking gigant's performance was driven by its global banking and markets and asset wealth management division. Revenue growth. We also got the revenue growth. Goldman Sachs revenue rose 17% to 12.73 billions, topping Wall Street estimation by almost 300 million. And fixed income boost. Fixed income was a bright spot, jumping 17% to 18 billions for the quarter. Now, capital markets revenue surge. This is a kind of summary of all of them and what we can analyze, plus also the outlook or the estimations we got. Conclusions. Capital markets revenue surge. Big bank dominance. The 5 largest US banks are seeing a significant boost in capital markets revenue, outperforming conservative forecast. We also got revenue growth in capital markets revenue across the 5 banks, increased 25% after declining every year since 2020, reaching 128 billions last year and expected to hit 139.4 billion next year. Analyst outlook. Analysts have issued overweight ratings for 4 of the banks, indicating that expect the stocks to outperform the market. So again, could view an optimistic vision on the financial sector, especially on investment banking industry in United States. Let me just to remind you, all of these expectations are exactly the feeling we got since last year when 2023, the regional bank crisis was hitting the small regional banks. And we have seen by then, that the big financial firms, the big banks, it was the ones who were buying in a discount price, let me say that, also another financial firms, which is the case we have seen in the case of Morgan Stanley and buying another regional banks. Positive outlook. Bank management teams have highlighted the capital market recovery has been in the early stages with significant dry powder still to be deployed by private capital. I will even add that in this case, like especially for asset management industry, the interest rate cuts that we are expecting to happen during the next coming months from Federal Reserve are probably gonna give easy returns on the portfolios by asset managers, most likely. Banking sector outlook, resilient performance. So in summary, all affecting the banking, the top 3, top 5 biggest banking investment firms. We got major US banks, including Bank of America, Goldman Sachs, and Morgan Stanley, have reported strong second quarter earnings, exceeding Wall Street expectation, which is true because we have seen already that is increasing the results above the expectations. Positive indicators. Banks have seen a rebound in capital markets activity, investment banking fees, and wealth management revenue, suggesting potential for continued growth. And ongoing challenges that we have seen in the future, or we consider for the future. Challenge has a potential loan losses and fluctuations in the net interest income remain, because if the interest rate is going to get cut by Federal Reserve, that means that the net interest income generated by these firms going to drop potentially. Requiring banks to navigate a dynamic economic environment. So volatility mainly in terms of NII. Now we have seen the map. We have also analyzed the expectations based on the results. But this is another map I was expecting to show you during this presentation. You can see by finbit.com the map of the whole Standard & Poor's SP 500 composition by sectors, also by size and market capitalization of the company. And as you can see on the screens, for the first time in the last, I will say 2-3 years, we can see how the market is in red only for technological sector. As you can see, this is the performance of the week. We have seen Microsoft dropping 4.16%, Apple dropping 1.86%, Nvidia dropping 6.32% so far this week, AMD dropping almost 15%, Meta 8.64%, Amazon 60.44%, but financial sector. Also, we United Health, we got here rising 12.29%, almost 13%. We also got JP Morgan rising 1.95%. We got Bank of America almost 4% up. Wells Fargo flat almost. But as you can see, the surprise here is like the rest of the sectors, include energy sector, ExxonMobil rising 5.76%, Chevron is rising almost 6%. As you can see, all the money is distributing from technological sector to utilities, to infrastructures, healthcare, to insurance, to banking industry, so even to energy sector, gas, oil companies. So the Coca-Cola, Pepsi, they are rising also 3.85% and 2.62%. So as you can see, the market is spreading and is diversifying the money, the capital from technological sector to another sectors, which eventually could get benefit from this kind of gap between technological sector and the rest of the sectors. As you can see, if you, for example, analyze SP500 and you compare SP500 with Dow Jones Industrial or with Russell 2000, you will see that Dow Jones Industrial, Russell 2000, they were missing the party for the last few months. They were not rising at all. Even actually, they were moving in flat movements in terms of price, while SP500 and especially Nasdaq 100 was rising and rising and rising for the last months constantly, while this market was keeping flat. Now, the things has been turning around, and is this the rest of the sectors, the ones who are rising, and while the technological sector is getting almost flat or just correcting the price. Going to the most important topic, what is the price discounting right now? You got in your screens Bank of America. As you can see, the movement was so nice, so clean after the results, moving to $44, most likely probably reaching $45 in the coming sessions. But as you can see, there is an important resistance, important top on that price, which will be the maximums generated early in 2022, which is around $47.50. If you see Bank of America reaching those levels, most likely sell order is going to start to play an important role on that area, and probably we're going to see some certain corrections. Even we got a bullish channel that is indicating that at some point a contraction wave going to start, probably in that area between 45 to 47.50, $48 per share. Worst case, next stop records maximum is $55. Sorry. So if the price is even moving farther than that the 46.50 to $55 per share, in that case, is probably we can expect certain corrections on the price. In short terms, you can see how actually those $44 are really precise, because since then we can see in 4 hours, the last yesterday's session and even today, is not moving further than $44. So it seems to be an invisible resistance on those levels. And as you can see, it's in line with the projections we have done. The line is there and it's touching the top of the bullish channel, indicating probably that the bullish rally it's over so far at the moment. And we can expect like next movement in the coming seasons. In terms of Morgan Stanley, it's a different topic. Morgan Stanley is actually challenged the resistance of $105, $107 per share. And as you can see, it's touching those levels, it's pushing the resistance, the maximum top prices. And I believe at some point, well, if it's working well, has all these cases, if the resistance are getting overpass and we see a breakout of those levels, we obviously gonna wait for a pullback, and every single movement to $105, $106, $107 per share is probably an invitation to buy more. But only when we see that the price is confirming those levels and is breaking and closing decision above those levels. So far, in this point, I won't take any long position, but because as you can see, during the early 2022, those levels were reached, and immediately after it was a massive drop, taking the price back to almost $75, $70 per share from $105, $107 per share. So be careful, watch out closely. But again, it's good signals. The revenue, it was above the expectation, so I will say that it's positive, and therefore we need to keep eyes on Morgan Stanley short term. Goldman Sachs, super strong, breaking new records, going up, up, and up. And as you can see, all I can do here in this case, let me grab some highlighter here. So this is the first bullish movement. This is the second one. And I will say our projection is reached at some point. Again, repeat the same symmetry and reach $535, $530 per share. That will be ideally the scenario, and therefore that's why we believe that the main goal is to reach $500 per share. But if that levels are achieved easily, we're probably going to see that the price is moving to $530, $35 per share. All right, so keep an eye also in Goldman Sachs, because it's very interesting movement, the one we got in the screen right now. That's all from my side. I hope you enjoyed this video, and most importantly, I hope you actually find this video useful for your portfolio, your investments, and your questions. Remember, this is not advice of any kind. If you want to invest in financial markets, please consult with a financial advisor. Take care and see you in the next video. Subscribe if you are not, and bye bye.